What's up, guys? Welcome back to 10 Baggers, the YouTube channel dedicated to finding stocks that can help us 10x our portfolio. Today I'm going to be talking about Tellurian Inc., ticker TELL, and why I believe this American natural gas exporter has serious 10-bagger potential. If you're interested in the content of the video, please drop a like and hit subscribe. Alright, let's jump in. Okay, so Tellurian is definitely a riskier investment for me, and I'm already down around 25% from my cost basis of $1 per share. I'm not making this video to pump the stock, just providing my opinions on it. Tellurian is a developmental stage LNG company, or liquefied natural gas company, which has seen a share price decrease from around $7 per share to 70 cents per share. I believe the company's chances to become a major player in the worldwide LNG market hasn't changed due to the Rona crisis, and as one YouTube commenter put it, the current share price makes for an asymmetric risk profile, meaning the probability of the company succeeding is about the same, but the entry price is much lower right now. As I said, I'm a long shareholder in TELL, and in this video I'm going to outline 3 major reasons why I think TELL is at least a 10-bagger from current valuations. So the first reason I am long TELL is because of their leadership. Tellurian has some of the most experienced leaders in the LNG industry. In fact, Tellurian chairman Sharif Suki essentially created the industry while CEO at Cheniere Energy, ticker LNG, which during his tenure saw its share price increase from around $50 per share at its lowest to over $80 per share at its highest. That's 160 times your money. TELL is currently in a similar position to LNG or Cheniere Energy was when Sharif Suki took over. However, they are looking to execute an even more efficient business model, which makes the major natural gas importers actual partners in the company. So both parties benefit from Tellurian doing well. I truly believe in the experience of Sharif Suki and his ability to understand the worldwide liquefied natural gas markets. I don't see him as a greedy oil baron who can't fathom making money in another industry. I actually see him as an astute businessman who genuinely sees an opportunity for natural gas to be a great American commodity export and also power the whole earth into the next phase of global development. Tellurian CEO Meg Gentle is also a very experienced asset to the company. Meg has spent her whole career in the energy sector and worked under Sharif at LNG or Cheniere Energy. I believe she is heavily invested in the TELL project and is dedicated to appreciating the share price for investors. Although TELL would normally be quite a risky investment given the situation, considering the combined experience of the two leaders, the chairman Sharif Suki and the CEO Meg Gentle, I have no doubt that Tellurian is being led by competent business people who deeply understand the industry, the potential of it, and how to lead Tellurian into the next phase of growth. The number 2 reason I am bullish on Tellurian is the current United States rig count and natural gas storage situation. A big catalyst for share price appreciation will be rising natural gas prices. Natural gas is priced on a supply and demand basis just like any other commodity. Because of decreased and perceived decreased demand during the coronavirus, rig count and thus production of natural gas decreased. We are underproducing 2019 natural gas levels by quite a decent margin, and at some point the disparity between the supply being created because of low production and the demand, the greater demand caused by cold weathers, will become large enough that it actually causes a spike in liquefied natural gas prices. This will eventually lead to Tellurian signing a long-term deal with foreign importers who want to become partners in the company because they will receive a long-term deal of natural gas where they can import it over long periods of time at a favorable price, and they won't be exposed to fluctuations in the spot price market due to the phenomena of supply and demand. So basically you have importers such as Petronet in India looking to get access to favorable American natural gas, which is very consistent. I mean, our United States is probably one of the most advanced countries in terms of regulations and doing business. So India is going to get at a great price, great natural gas on a consistent basis with laws governing the transaction in exchange for an investment in Tellurian, which will also make them a partner. So as Tellurian does well, the importer, Petronet in this case, will also do well. Tellurian is in the negotiation stage of negotiating one of these long-term deals, and I think that they're in a good position to capitalize on one of these deals when we see an appreciation in the liquefied natural gas market prices. Meg Gentle was on Bloomberg last month saying that she believes $5 is around the catalyst point for where Tell will start signing these long-term deals. So if you take a look at natural gas prices, you can see them heading towards the catalyst price that Meg Gentle herself said on Bloomberg.
In Asian LNG market of $2 an MMBTU, that's already been strengthening, and we see the winter prices now over $5 an MMBTU. $5 is a really, really important catalyst because we will deliver LNG into Asia at $5. So as the market recovers over that price point, there's a return on equity that supports those investment decisions. And as we get through what's really going to be a very, very tight supply year in 2021, we expect to see LNG prices back in the normal trading range over $7.
And is the
in addition to what Meg Gentle said on Bloomberg, Sharif Suki is recently putting out videos on YouTube through the Tellurian YouTube page about why he thinks that the rig count situation will ultimately increase natural gas prices. And I will actually include a clip of that here.
So everything is going along the trends that we expect. What does that mean for the global LNG market? It's very simple. If, as we expect, Henry Hub by this winter would be at $5, that would mean that on the water, accounting for fuel costs and for transportation costs domestically, it would be at $5.75, and it would reach Asia at slightly under $8 an MMBTU. At that point, global buyers would have a choice. They could either refuse to take American LNG or to pay the price that it requires in order to get, on an incremental basis, American LNG delivered to Asia. Is that really a choice? American LNG today represents almost 20% of global production, and you cannot simply take 20% of production out of the market and not expect to have a serious reaction to prices.
Okay, so the number 3 reason I'm bullish on Tell is due to long-term energy trends. There's no argument that the world will increase renewable energy capacity in the coming years, but I think that the argument that all non-renewable energy sources will go away is not realistic in any meaningful time span. Right now, the renewable energy grid accounts for 17% of America's energy. I believe a more realistic expectation for the grid would be 50% renewables and 50% natural gas. Natural gas taking over for coal, nuclear, and oil. Natural gas is required to balance the grid when renewable resources can't generate enough electricity. That's when we need fossil fuels to kick in to pick up the slack. If there's a day where there's no sun or the wind isn't blowing that well and not enough energy is generated from renewable sources, you need a fossil fuel in there for balance. Some days it will be 60-40 renewables natural gas, and some days it would be 40-60 renewables natural gas. Think of it like that. As far as fossil fuels go, natural gas is the cleanest to burn, and it's in the economic interest of the U.S. because we can actually be a net exporter of liquefied natural gas to the rest of the world for quite some time. This will create jobs for Americans and improve our economy. As long as it can be extracted in a quote-unquote green way, natural gas has the potential to be a green energy for the entire world for quite some time to come. I don't believe the liquefied natural gas industry is under any threat currently. That's especially not the threat that's reflected in the share price of these companies, and I believe it will continue to grow with the world economy. Morningstar Research assigned a wide moat rating to Cheniere Energy, as they literally have no competition in the rapidly growing industry. In fact, Cheniere Energy is one of their largest, if not largest, holdings in their wide moat ETF. So I think this shows what a good position Cheniere Energy is to capitalize on the situation, and I think TEL is just a few years behind them. And when TEL gets the sort of show on the road, the world economy definitely has room for two major U.S. exporters, and like I said, Tellurian can step into the industry and create a duopoly with Cheniere. And if that happens, you can expect, a market cap in the billions for TEL, which would be, a 10-bagger or even more from current valuations. All right, guys, so that's my video on Tellurian. If you found it useful, please drop a like and hit subscribe. If you have any comments about the video or any stocks you're looking at currently, please let me know in the comments. And catch you next time. Happy bagging, folks.